So I want to talk a little bit about kind of like investing, and you've obviously been a successful angel investor, and you're spending more time on the investing side looking at new projects. How do you think about kind of evaluating new projects, and particularly how does that compare to 5 years ago when you were focused only on kind of angel investing?
Yeah, so to be clear, I actually don't consider myself qualified to invest in crypto. It's way too technically complicated. So I actually work with partners of mine who are more technically sophisticated and actually read the source code and audit it and really understand the underlying protocols. So the disclaimer here is my personal investing tends to go through funds like Polychain and Metastable, or I'm looking at the new index fund that Bitwise is launching, for example. Disclaimer, I'm an investor there. So I want to be a little careful. I don't want to give anybody investment advice, nor do I want to imply that I actually know something that they don't, because I think the deeper you get into this, the more you realize how fundamentally ignorant most of us are. The set of people who are qualified to invest in this space is probably like less than 1% of the size of all the venture capitalists out there today. It's a deeply, deeply technical space. It might be like the chip investors were back when venture investing was starting out in the 1970s or 1980s. So it's a very, very specialized discipline. That said, I think the most interesting use cases these days are mostly in what I would call the money tokens, the ones that are either trying to be a store of value, like Bitcoin, or a medium of exchange, like a Zcash or a Monero, where they have fungibility and privacy, so they're trying to be used for transactions, or they're trying to be a unit of account, like the stable coins like Basecoin and MakerDAI and so on. I think those are somewhat interesting. I think the ones that are trying to power financial contracts, such as Ethereum and Tezos and kind of that whole chain, are interesting. So overall, I think at least in the near term, we're going to see a lot more of the financial and money use cases realized, partially because that's technically an easier use case. Like keeping track of a ledger and accounting is simpler than trying to figure out how to power entire new networks for bandwidth or solar power or those kinds of things. So I think the utility tokens have a little further to go. They're also just more lucrative, frankly. Like if you can redefine what money is, that's a $1 trillion outcome, as opposed to you build a better Airbnb or Uber and maybe that's a $100 billion outcome. So those are the ones. So I tend to invest in funds that then tend to go out and look for the money tokens, is sort of how I would put it. I also do meet with a lot of very early stage companies with brilliant scientists coming out of good universities who are working on these things. And it's intellectually fascinating. You just learn so much about what's possible here. Again, the money is pulling people in. It's a signal, when prices are high, it is a signal to suppliers to enter the market. So in this case, it's a signal to entrepreneurs to enter the market. And there are brilliant people now who are trying to solve new problems using blockchains. The bad news is that 95% of it is not problems that should be solved using blockchains. So 2018, we're probably going to see a lot of VC-backed companies that shouldn't be using blockchains who, in 2016, didn't know anything about it, and 2017 have been busy really retooling themselves to be a blockchain-based company. And 2018, they're going to try and raise money and fall flat on their face because not everything needs to be decentralized. Decentralization is very expensive. It's very inefficient. You're essentially trading off computational scalability for social scalability. Social scalability is only important when you don't want to trust third parties, but a lot of these companies are actually running as a central actor where it's their company, they're making all the decisions, but now they've inserted a decentralized token in the middle, which isn't really decentralized, it's just horrifically inefficient. And they're using that because they hope they can raise money. And going back to the bubble thing, I think one indicator that we are in a very frothy and maybe bubbly environment is there are a lot of tokens that are trading at very high values that are junk. Right? If we had sort of the equivalents of the Amazons and the Googles out there trading at very high valuations, and they could be trading at $1 trillion valuations, but as long as they were the really good ones, then I think there would be less cause to say there's a bubble. But when you have the kind of market where maybe the market goes up 10% in a day, and all of them go up 10%, including the really junky ones, or maybe the junky ones go up 20 or 30 or 40%, that's when you know we're in a very frothy environment. So I think right now, at least, the market isn't distinguishing quality. Now, of course, quality is relative. Everyone has a different definition of quality, but I think there are things out there that are like quite clearly Ponzi schemes and are even labeled as such on various websites that show the market cap trackers, but they tend to go up all the same.